Hi everyone, my name is Gabrielle, and welcome to another episode of Let's Talk Money with Friends. Oh my gosh, it's been a while since I've gone live, and it's been an experience today. But I just want to welcome you to another episode. Yeah, well, let's talk money with friends. He's here and alive, and I'm unstoppable. I'm willing and able, and I will continue to do what I need to do to make this Let's Talk Money an awesome community for you and for all your friends. So I would encourage you tonight, if you are watching me and you like the show, because I know lately we've gotten so many calls from folks who are saying like, Gabrielle, how things going? Because we haven't seen you in a while, and they asking me to come on live. And so tonight I'm live. I hope you can see what I'm seeing. Because it's always a challenge to go live. Yeah, it's been a minute, so I was having some challenges. But you know what? I'm here. And I believe in okay. Uh I'm here, but I'm not on camera. Hi everyone, my name is Gabrielle, and welcome to another episode of Let's Talk Money with Friends. Oh boy. Okay, this is gonna be one of those days. But I'm live today because I wanted to go live on Let's Talk Money with Friends because we started this show about 4 years ago, and because of some challenges, we were doing a lot of old shows. But tonight I wanted to go live because I just came from an awesome conference, and I met so many great people. And the presentation that I did for the conference, I was like, you know what? Why not do it today? So if you are here and we're a little behind schedule, it's about 7:09. We are here. And we just want to tell you, thank you so much for watching. Thank you for supporting us. Thank you for being for us and supporting us over and over again. When we're not online, we're not online, we're not live, you call us, you ask us how things going. How come I haven't seen you? So I just want to say that thank you. Thank you for supporting us and thank you for being a friend. Thank you for being a friend. For those of you who know me, you know I love to sing. Singing is one of those things I like to do because I'm a blessed woman. Look at this, blessed. And I always like to share. And every day right now, if you are someone who's following me on social media, you know that every day that I share a little bit about myself and a little bit about my faith and a little bit about what's going on every single day. But for years now, it's been 4 years that I've been doing Let's Talk Money with Friends. And today we don't have friends with us, but you are our friends tonight. So feel free to chat with us and send us a message or make a comment about what we're going to be talking about. As I mentioned last week, if you're on my social media pages, you know that I was at a conference. It's the National Alliance for the Advancement of Haitian Professionals. We were in Atlanta, and I was given the opportunity to come and speak about wealth building, how important some of the strategies that you need to have in order for you to build wealth. I'm gonna share a screen here because when I was doing this past week, I did not do it by myself. Actually, let me see if I can grab those names here. Yeah, I'm able to grab those names. So I actually did this with several people. One of which, gosh, forgive me, is my new friend James Marquis. He's a doctor, PhD, and everything. And then we have Rose Apollon, who are on the panel with me, and Jason. Jason is from the financial services company Merrill Lynch. And I was like, Jason, you should come on the show. He's like, well, I was in financial services, working for a company for a long time. Yeah, they want to approve everything. So, but James and Rose will be on the show with me soon because I've invited them and they said yes, anytime they'll be on the show. So I did the show. Let me just stop for a minute. We did the presentation about wealth building. As you can see, let me share it again. The topic was strategies, yeah, financial mastery. navigating investing, retirement planning, and wealth building. And basically, our focus was mostly on wealth building. Some of the ways that you as a person can build wealth. I'm on this every Wednesday. I do this show and I say money encompasses everything. And I do this show because I have a passion for community and I have a passion for families. I have a passion in wanting to see people do well, and not only for them, but also for their children and their children's children. As a person of faith, I remember years ago when I was a child, I learned that the good book tells us that a wise man, it's in Proverbs, a wise man lives in inheritance for his children's children. So that's why when we talk about wealth building, we're not just talking about you getting rich for yourself. Yes, it's important to take care of yourself, but also we are talking about building wealth, you know, for you, for your children, and for your children's children. But in order for you to do that, you got to follow certain principles. One of the things that we talk about all the time, and I have my vision board, I'm always looking at it. From day one, we kept saying the importance of having a financial, working with the financial professionals, right? Working with financial professionals. But why are so many not working with a financial advisor? Oh, we came up with some reasons why. Let me see. Number one here is that they don't have access to one. I mean, it's the truth. Financial advisors, the industry can be very intimidating. Most people don't want to they don't feel like they have what it takes. They don't have enough money to work with a financial advisor. So they don't pursue that, right? They don't pursue that because they feel like, oh, what happened here? It's happening today. They don't pursue that because they feel like, oh, you know what? I don't have enough money for a financial advisor, so I'm not gonna apply. I'm not gonna reach out to someone and help them help me because I cannot afford it, right? Well, is that a mistake? I think that could be a mistake, a major mistake, because we'll tell you in a minute the importance of working with a financial advisor, right? So yeah, working with a financial advisor, why do most people don't? Because they don't have access. Yeah, too expensive. The second option here is people think it's too expensive. This is literally the presentation that we did at the NAA this past week. Um, and I just want to share a little bit of that with you while I have time today. We don't remember, it's about building wealth, not only for you and for your family, your children, and your children's children. But in order for you to activate that option, you gotta have knowledge. And many of us, if you did not go to school for finance or you were not privileged enough to have had the opportunity to grow up in an environment where financial planning and financial advising or financial information was being disseminated, shared widely and freely, you're going to need help. But many times, many of us are apprehensive about getting help because we feel like, well, where is the help? I cannot find it. It's not readily available for you. And sometimes it's because you think it's too expensive before you even ask somebody for help. And you think you don't have enough asset. I don't have enough money. Why do I need a financial advisor for? You think you can do it on your own? Many of us actually believe that we don't need. It's almost like you're learning a language and you sitting at home learning it by yourself and you don't go practice. And I feel like when you talk to a financial advisor, even if you go and do some studying yourself, it's always good to go and practice and really bounce off ideas with somebody else so that you know for sure you're on the right track. But some of us think that we know everything, or if not us, we have what, an uncle, a brother-in-law who knows everything. How many of you have brother-in-laws? Every time you say, you know what, I'm thinking about hiring somebody to help me. He's like, oh, you don't need anybody. I know everything. Because he wants to feel important. And it's great to have family members who can support you. But many times he really doesn't know. He or she doesn't really know. That uncle, that cousin, that sister who thinks that she knows everything about finance really may not know everything. So you need to hire a professional who has a job 24 hours a day, 7 days a week, and that's to help you. And the last reason, never get to it, procrastination. It's important. Remember, we're here tonight to talk about the wealth strategies. Your wealth strategy, your wealth building strategies matter. The strategies that you use to build wealth really matter. But in order for you to activate that strategy, many times, or those strategies, many times you need to get the help of a professional. Why? Because when you get a professional to help you, three good reasons we had here. One of which is accountability. You get support with your dreams. Tomorrow, 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 tomorrow never comes. If you don't get accountability, how many of us trying to lose an extra 20 pounds? Oh boy, when I have a trainer helping me, I do much better than when I'm by myself. Why? Because when it's getting heavier, you're getting tired, you're pushing the weight up. Guess what? If you have someone saying, yes, you can, go, Gabrielle, guess what? You're able to stick to it. But if you are on your own, many times you're like, okay, 1 and 2 and 3, okay, I'm tired. Accountability is very important to support you. An advisor will keep you up to date too. How many of us are doing the same thing and expecting different results? Insanity is doing the same thing and expecting different results. You don't want to keep doing the same thing. We want to do something different in order for us to get different results. And then guess what? A trusted advisor to be with you and your family in the most, when you're most needed, when it is most needed. We have folks who have lost loved ones. Let's say you're the breadwinner, you're working with a financial advisor. If you lose a spouse, guess what? That person is gonna be able to be there to hold their hands, to guide them, to help them with the house and taking care of the kids, maybe setting up trust funds if you had some things in place. You really need someone. Yes, you could find a family member. Yes, you could find a friend, but someone who is in the industry, who understands how it works, how money works, who understands the intricate part of the industry, who can really hold your hands during difficult times. You need to build a relationship with that person. So wherever you are, don't make excuses. Go and activate that option. Why? Because there are strategies we need to follow in order for us to build wealth. What are 4 wealth building accumulating strategies? 4 of them we came up with. There are so many others, but we wanted to keep it simple. We wanted to give it a kiss. Keep it simple. I don't know. I don't want to say the last word. I don't like that last word, but keep it simple. Give it a kiss. Give it a kiss if you want to build strategies. If you want a full wealth building strategies tonight, as I'm speaking to you on Let's Talk Money with Friends, and I'm trusting that this time around that you're gonna share Let's Talk Money with Friends with your friends, because we know what we are offering here is valuable. We know you are learning from what we're doing, and we know you can press the button and hit share. We know you can press the button and hit like. We know that if you do that, just like the legacy, we're talking the financial legacy, not only are you going to change your life, but you could change the life of somebody else, a friend of yours who is wondering, what can I do? I'm nervous. I don't know what to do. I have children. I want to do something for myself. I want to do something for them. What can I do? And here I am on Let's Talk Money with Friends every Wednesday at 7 o'clock. I'm giving this information free of charge to you. You don't have to worry about the cost because it's coming at free of charge to you. It's not free. It wasn't free for me, but it's free for you. Okay? That knowledge costs money, and I'm giving it to you at free of charge. So you need to pay it forward by sharing with a friend. Because if you apply these 4 strategies, the first one is savings and investing. But how do you save? Home ownership. How do I get a home? Life insurance. Why and when should I get a life insurance policy? Business ownership. When should I exercise that option? Well, in order for you to activate these strategies, you have to have a sense of urgency, okay? The urgency that I think it's important is for you to understand that there's a formula. There's a formula for wealth. I learned that a long time ago, and that has kept me busy. I hope it's gonna keep you busy, okay? Keep you busy and keep you thinking that the time is now. So in order for you to build wealth, whether it is savings, home ownership, buying a business ownership, or getting life insurance, you have to think like, oh, what do I need in order to exercise any of those options? I need money. So when it's time for you to save, you have to think about money. Where do I find the money? Well, we'll talk about that in a minute. You need time. Do I put $100 in my account today and expect to have 1,000 next week? No, you need time. You also need rate of return. What do you get when you put your money away? Where do you put it? Do you put it under your mattress or in the bank or savings, investing, depending on what you're trying to do? Is it short-term savings or long-term savings? Long-term savings is investing for retirement, your kids' education. But you have to think about, I need to put money in. I need to give it time. And I need rate of return. Why? Oh my gosh, during this election, all we heard about was inflation, 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 inflation. We actually did a show called Inflation Matters. Inflation, inflation, inflation. For those of you who don't know what inflation is, I'll tell you in a minute. Hit like, hit share, hit make a comment, let your friends know that we are here every Wednesday and we are showing information that they need to know. If they don't know, if they already know it, they need to be reminded of it because it's very important. And then you have to think about the negative part of savings is taxation. During the election time, you hit inflation and you hit taxation. But I also believe procrastination is a negative part of savings. In order for you to build wealth, you need money, you need time, you need rate of return. You cannot put all your money under the basket, in one basket or under the mattress, because you have to think about inflation and you have to also think about taxation. Taxation is important. So let me stop sharing for a minute because I don't want to be showing the screen all night long. But I just want to say the reason why I'm sharing this tonight is because we were at our conference and I had the privilege of presenting this very concept. You know, I'm someone who's very I like to let it do what it do, so to speak. So I'm not the type of person who's doing a presentation and going word for word because I let it do what it do in terms of like whatever the audience is looking for, that's what I deliver. But we had an opportunity to highlight those points that I'm sharing with you tonight. You know, the importance of understanding how money works and how money can work for you. And when you're thinking about building wealth, it's not only for you, but also for future generations, your children and your children's children. Because a wise person, someone who thinks strategically, wisely, doesn't only think about themselves. They think about leaving an inheritance. They leave an inheritance for their children's children. So tonight, I wanted to encourage you to think about how do you activate that option to leave an inheritance for your children's children. And the way you activate that option is by you partnering up with someone. Many times we say no to an advisor. We don't talk to an advisor. We don't reach out to someone who knows more than we do because we think we don't need them. We can afford them. We have a cousin or uncle who can help us better, or we know enough already, or we put it off and put it off, procrastination. And I just mentioned tonight that if you don't do these things, some of the benefits of having an advisor is that you have someone who can hold you accountable, someone who's going to be there for you. The other thing is that you have someone who knows, who's staying up to date. And that person has continued education that they do. They have to stay up to date because the industry changes so much. Financial services industry always changing. You have to stay up to date. And in order for you to keep your licenses in this industry, you have to stay up to date. And then, of course, you need someone to hold your hands, just like a pilot. Some people think that they can pilot a plane by themselves until there's turbulences, until there is, there are issues and the plane is about to crash. And you need someone who has skills, someone who has had the experiences dealing with similar issues before. They can hold your hands and help you through hardships, through difficulties. A trusted advisor is a friend that you can count on. Why? Because if you want to build wealth, you have to do certain things. One of the things that you could do in order for you to build wealth is learn how to save and invest. You gotta start with saving baby steps, and then you learn how to invest in the market. The next thing is that you have to activate the option of home ownership, because we said those are one of the ways to build wealth. The next thing is having a life insurance policy. Many of us cannot accumulate cash enough to leave enough for our children. But if you have a life insurance policy, you can make a difference. Point in case, you have the plan, you have the lofty plan of saving a lot of money, but you die prematurely. Oh my gosh, I don't know if it's because I have something going on with my computer. Every single time I open my computer on social media or just on Google, there it is, some young person. Today I saw this famous, well-known influencer from Australia, 30 years old, who died. And he just had a little baby. The baby's not even 1 year old. One. So if he didn't have a life insurance policy to leave behind for that child, you can only imagine. I hope either he had accumulated enough cash through savings or had an insurance policy to help take care of this child and the spouse or the mother. Okay. And then of course, one of the ways to build wealth is through business ownership. So let me go back here again with what I was saying. Now, savings, right? We talk about it here on the show. How many times have I said on this show, in order for you to save money, you have to have a budget. When you have a budget, you tell your money what to do. Without a budget, your money tells you what to do. Your money tells you what to do. In order for you to have short-term savings, you have to have a budget. In order for you to have long-term savings, you need a budget. Because, I was doing a study, I looked it up. Do you know there was a survey done in 2024? A survey done in 2024. And the survey found out that 20 to 32% of Americans do not have, American people, meaning like those who live in America, 20 to 30% of them do not have less than $1,000 of savings. Less than $1,000 of savings. And the reason why they have less than $1,000 of savings, because they're not saving. They're not disciplined. Yes, some people may have other challenges, but most people is because they don't have a plan to tell their money what to do. They don't have a budget. We did a show called, the show was Your Budget Matters. Look it up. They're all online, and that information is available to you for free. One of the ladies from the group that I was part of said to me, Gabrielle, I feel overwhelmed. How do I get information? Oh, I don't know. I cannot afford a financial advisor right now. Well, there are plenty of free stuff online. If you cannot afford someone to sit down with you and let you know everything you need to know, you need to take advantage of the free stuff. Let's Talk Money with Friends, our page, Let's Talk Money with Friends is available. We have maybe 300 videos, all of them talking about money, what you need to do to empower yourself. So take advantage of those videos and that information. Because if you don't have $1,000 saved and you have an emergency, guess what you do? You pull your credit cards, and that's will lead to bad credit. We talk about credit matters. If you don't work on your credit, guess what? Not only are you not gonna be able to afford to live, but you're not gonna be able to do what we need to do next. And then long-term savings is retirement planning. So many of us want to build wealth, but guess what? We have retirement at work, 401k, 403b, 457, annuities, you name it. All these retirement saving strategies that you have at work, but you don't take advantage of those because you think tomorrow, tomorrow, tomorrow never comes. You got to do it now. You remember the formula? You need money, but you need time. And the pension plan at work, I was talking to someone and he said to me, Gabrielle, I hope you reminding people that it is better to go to a job in many ways. You go to a job where they're offering you stock options, they're offering you a pension plan. It's better to take a job like that than to take a job that's just offering you cash. Because many times, again, with the lack of disciplines, what do? We spend all that cash up front, and then when it's time for retirement, we don't have anything. So if you are someone who's not disciplined enough to save, you'll get an offer, and the job, two offers. One job is $50,000 a year. I'm just throwing a number. And that job has other benefits like a pension plan. You could get stock options depending on the job or do all the different benefits that the job offers. Listen, versus a job that pays you maybe $70,000 but doesn't have anything. If you're not disciplined enough, you need to really think about the one that will help you save. Because if you have a company that you work with that gives you better benefits, definitely those are the type of companies you want to pursue, you want to work for, because that company will help you create the wealth that you need to create for yourself and for your children. I mentioned that, of course, let me just stop this. Again, we don't want to be on doing a PowerPoint presentation all night, but we wanted to share this PowerPoint presentation that we actually did at the conference we presented at the conference last week to encourage everybody who was there to activate the option to start building wealth. Because when you have money, you need a lot of time. If you don't have a lot of time, you need a lot of money. When you have a lot of time, you don't need a lot of money. So the other thing, in order for you to build wealth, the idea of time. My gosh, we talk about procrastination. Time waits for no one. If you are 20 versus 50, what do you think? If you are 20, you could put away $100 a month. But if you are 50, my friend, you're gonna need $500 because you waited too long. Procrastination, it's not good. Okay, the time is always now. Start young. With little time left, your regular contribution will have to be a lot more. If you don't have a lot of time, your contribution will be a lot more. It's very important that you do that. Time is of the essence. Time is of the essence. So, of course, after time, we talked about what? Rate of return. Do not, you see that egg basket here? Do not put all your eggs in one basket. We talk about diversification in investing. Of course, the money that you need for emergency should be in a safe savings account, CDs, safe, because if you have an emergency, you want to have access, the highly liquid, meaning like you can convert that money, you can grab that money overnight at the ATM, go to the bank the next day. That's for emergency. But if you're thinking about your retirement, oh boy, I was in banking for 10 years. I remember seeing certain people come into the bank and they had the passbook account. We don't have passbooks anymore, but they had these accounts that were like with $100,000, $200,000. And I'm like, Mr. and Mrs. Jones, what do you need this money for? What's the purpose? What is the plan for this money? Oh, I just when I retired, I just want to have some money. But Mrs. Jones, you're only 55. Your retirement is not maybe another 10 to 15 years. How come this money is in the savings account earning 0.5%? Well, I'm afraid. I'm afraid that I might lose this money. Mrs. Jones, you are losing. Why? Because you put all your eggs in one basket. You did not diversify. And then you're not doing what? The importance is outpacing inflation. You see that little boy, that little man running with your money? Inflation, that's what it does. Earlier I said I was going to talk about inflation. It's very easy to understand inflation. In 1987, a single family in Boston was maybe $100,000. Now you need almost $1 million. A single family in a really nice neighborhood is going for close to $1 million. A gallon of milk, for those of you who do have children, uh, in 87, 79 cents, 99 cents was for a whole gallon of milk. Today, go to the store and see. Some stores more expensive than others, but I've seen it on average $6. That's inflation, meaning like the cost of things are getting more and more expensive. So therefore, if your money, like Mrs. Jones, leaving her money in the bank account for 10 years, that guess what? That $200,000 is not gonna be able to buy her the same goods and services that it was in 20 years or in 10 years as it could today. So that's why she has to make sure she outpaces inflation, meaning like her investment where she puts her retirement money. Remember, emergency funds, okay, at the bank, but your retirement should not be sitting at be part of a CD or a savings account at the bank or under your mattress, because this little boy here, the man you see running with the bag of mullahs, he's running away with your money. That's what inflation does. The value of your money gets to be less and less by the day, every year. Because I remember my first car, my gosh, when I got a brand new car, my second car was a brand new car. I don't think I paid $10,000 for that car. Try to get a car, brand new car now. I think it was like, what is it, Toyota? Toyota Corolla. Try to get a brand new right now for $10,000. It doesn't exist. So that's why your savings has to outpace. Your saving account must outpace. Your retirement account must outpace everything that you're doing in terms of future savings. Investing must do better than inflation. Inflation is on average 3.5%. So if you're getting like Mrs. Jones, 0.5%, she's losing money. A lot of us are afraid because we say, I don't know enough. That's why I'm not trying to do it. I'm not going into the market. I'm not investing because I don't know enough. Listen, I'm not giving you advice today. I'm just sharing concepts. But what I'm saying is that you not knowing enough is not an excuse, because at the beginning of this conversation here, I said clearly you need to work with a financial professional, because this person stays up to date and they can help guide you. If you don't know, that's no excuse, because guess what? Not only is inflation running, but we have Uncle Sam. We call it Uncle Sam and Uncle Charlie in my town. That's what they call Uncle Sam and Uncle Charlie. Uncle Sam is the IRS. Uncle Charlie is the State Department of Revenue. Listen, they want their fair share. Their fair share is you make money, you pay taxes. You spend money, you pay taxes. You save money, you pay taxes. You die, you pay taxes. We have income tax, we have sales tax, we have estate tax, we have capital gains tax, God knows. I studied taxation. I don't want to get into that tonight, but the only thing I want to let you know is that everything you do, you pay taxes. So you have the option. It's your prerogative. You can pay tax now, pay tax later, or pay tax never. And tax avoidance is legal. Tax evasion is illegal. So tonight, if I say anything to you about taxation, I'm a tax professional, so I can talk freely about taxes, and I will let you know. I'm not giving you advice, but you do definitely need to speak to your tax advisor. If you earn money in your savings account, every year you get those 1099 INCs. You remember the bank, you make $10, they send you a 1099 INC. Pay tax now, because when you file your taxes, you gotta pay tax now. Pay tax later, your retirement at work, 401k, pension plan. You don't get an INC, the 1099 INC. You don't get those statements because guess what? When you retire and start taking the money out, that's when you pay tax later. And then there's such a thing as tax never. You never pay taxes because the IRS, sometimes they're nice. They say, you know what? You can make money in this, you can make money here, and we'll exclude it from your taxation. Income taxation, they'll exclude it from your income taxation. There's such a thing as tax exclusion, meaning like you never have to pay taxes. Now you have to know, again, sit with a financial advisor, sit with someone, call someone who can help you so that you don't keep making mistakes and you don't procrastinate. Because again, the fear of the unknown should not be an excuse to not do what you need to do. There is help. The life you want in the future is the life you have to create today. You see all this calculation when I was what is it? The function of X. This calculation, I used to be able to do this when I was in college because this is calculus. But I forgot some of these. Actually, that might be um yeah. A little confusing. I'm sure some of you are looking at this here, it makes sense. And some of us are looking at it and we're like, we've seen it before, but it doesn't really make sense because we've been far away from this. Whereas other people who are doing it every day, like those mathematicians, those engineers, they're doing it every day. It's the same thing with the financial advisors. There are things that they're seeing every day that could help you make sense of these mathematical equations. But if you're not in it every day, you'll see this, you'll be like, it looks familiar, but I cannot remember, right? So it's very important that you know that there is help, there are opportunities for you to activate that option, but don't make excuses because making excuses will not get you to where you want to go. Because, yeah, I just want to reiterate again. Tonight I'm here. I wanted to share this concept with you. I was at a conference and I had the privilege of sharing with the audience some of the wealth building strategies. We all want to build wealth, but many times we don't get it done because we procrastinate too much or we make a lot of excuses about not knowing enough. Let me tell you, this information that I just shared with you, many of the people you would think would have exercised these options have not done that. Some of them are your friends, your family members, your cousin. We need to have conversations about money on a daily basis, regularly with our friends. That's why we call this show Let's Talk Money with Friends, because we want to have conversations so that we can tell our friends how things going. Are you planning properly for your retirement? Do you have a savings account for emergency? What have you done to prepare for tomorrow, just in case there's emergency, unexpected loss? What have you been doing? If you're not having these conversations with your friends, really, are they really your friends? Because I talk money with my friends. That's why I call the show Let's Talk Money. Let's talk money. Some people say, let's talk about money. No, I don't want to talk about money. I want to talk money, money itself. I don't want to talk about it. I want to talk it. Okay? Just like I want to speak English. I don't want to talk about speaking English. So it's the same way. We want to talk money because money encompasses everything. And if you talk about money with your friends, guess what? The first strategy that we talked about is number one, again, you will have saved enough to create a lifestyle that you want, not only now, but at retirement. Yeah. Most people don't plan to fail. They just fail to plan. Okay? So you need to plan for rainy days. You need to plan because if you don't plan for emergencies, you don't plan for your retirement, guess what? You're on your own, my friend, because people are not responsible for you. You are responsible for yourself, even if you are part of a couple. I've sat down with married couples and I say, who's planning here? Oh, my husband is doing everything. Well, what if your husband drop dead tomorrow? you need to be in the know as well. It's a partnership. When you got married, they say for better or for worse, together, you do this together. Don't say he's responsible. Yes, somebody might take the lead, but that's why if you have a financial advisor, they know that this is a couple and they're able to help you guys together. And if the breadwinner or the person who was the most active or the most involved with the financial advisor is no longer here, that person, the spouse, would have trusted the financial advisor enough to say, if I'm not here, I know you're going to take care of my wife, you're going to guide her, you're going to lead her properly. Okay? Because when someone is at the morgue waiting to get buried, guess what? The bills still come. Bills are coming, responsibilities to pay the mortgage, everything. Nobody tells you, none of the companies you deal with are gonna say, well, I'm sorry, you just lost your husband. Why don't you skip payment for the next 6 months? They don't. So that's why you have to have not only savings for emergencies and savings for retirement, but also the second strategy that I believe that you can do to build wealth is home ownership. Unfortunately, in this country, if you have a home, that's one of the ways that you can not pay taxes. We talk about pay taxes now, pay tax later, or never. Never. I remember saying to someone who was renting for 10 years, they had a great job, um, great credit score because they had been very disciplined with saving money and not overspending. And then, but she's sitting in an apartment paying like $2,500 for an apartment a month. And I'm like, how come you never thought about buying a house? Well, buying a house is too difficult. I'm a single woman. I don't want to be the responsibility of owning a home because it's too much. She gave me all the reasons why she didn't want to own a home. And I said, do you know there are some reasons why you should own a home? And she's like, oh, do tell, Gabrielle. I'm like, one of the reasons why is that you don't have to worry about your rent going up every day. If you get a fixed mortgage every month, I mean, or every year, if you get a fixed mortgage for 30 years, most likely, yes, your escrow will go up, taxes and insurance will go up, and maintenance, whatever. But the PI, principal and interest, if you get a fixed mortgage from a reputable organization, that's what we talked about, Banking Matters. If you haven't seen that show, it's online. Go see it. Banking Matters, the importance of working with a bank that you can trust to hold your hands and also to help you keep your home in times of urgency or emergency or difficulties. So I said, that's one thing, you don't have to worry. And if you want to build community, that's another reason why you all want to own a home so that you can build community because people who are coming and going usually don't care about what's happening in the community. But most importantly, selfishly, is the fact that you have this big tax break, capital gains exclusion. Have you heard about this? IRS code 121. If you own a home as a single person, you can, capital gains mean like your property could go up $250,000 if you sell it. Let's say, example, you buy a house for $500,000 as a single person and you sell it. I don't know, 3 years later, you have to keep it for a couple of years. 3 years later, you sell it for 750,000. I'm just giving an example. I hope it's not going high that much. Or so quickly because it's not good for the economy for prices to be going out of control. But I'm saying like if it were to happen, guess what? You could walk away and not pay a dollar in capital gains taxes because of IRS code 121 that is excluded. And if you're a married couple, ching ching, you have more. And having a home, not only can you access all that wealth at no tax free, but also, I would encourage you to have homestead exemption. Always, if you already have a home, make sure you cover yourself so that that money, that wealth that you've accumulated, the capital gains that you have on your property, the equity, in other words, the equity that you have, you don't lose it because you didn't protect your asset. Because when you build in, you have to know how to protect. And one of the ways to protect is by having the homestead. Okay. So I would say, yeah, get that. In Massachusetts, it's $1 million now. And if you are in other states, look it up. Go to your registry of deeds. Tell them I have a home. I've had it for a long time. It's where I live. What can I do? The registry of deeds will tell you that you need to protect it. The other one is life insurance. You remember the couple that I mentioned? I remember vividly, I had a couple, a young couple. I went in, sat with them, got insurance for both of them. They were very young, in their 20s. Unfortunately, the husband died 6 years, 7 years later, in his early 30s. That insurance policy is the reason why his widow is not having to ask for help, asking family for financial support, or didn't have to ask the government for support to take care of the child that they had together. So life insurance is definitely a way to build wealth. It's the third way. So the first way is through your savings and investing, what you do. The second one is you own a home. That's another way. The third way is by building wealth. To build wealth is through life insurance. Because if you are young, like this person was very young, he did not have enough time to accumulate a lot of money. If he had lived 65 years and had saved religiously, regularly, he would have been able to do that. But because he did not live that long, guess what? Life insurance was able to help him. And lastly, I just want to say, I've seen it and I've seen it like it was nothing else. Most people build wealth in this country through business ownership. But when you discipline with your money, you save early, you start saving early, you can buy yourself freedom early so that you can go pursue your dreams or your dream that you have. Many of us are sitting at the job and we have a dream to do something, but you will never be able to get rich by just getting a paycheck. It doesn't happen. They say you can either build somebody else's dream or you build your own dream. But if you start early and you make sure that you do what you need to do early, you are able to build a legacy. Today, we did not have friends with us, but we are believing that this information that we are sharing with you, it's a PowerPoint presentation that I shared with a group of people that I met last week at a conference. The National Alliance for the Advancement of Haitian Professionals had a huge conference in Atlanta, and I had the opportunity to really get into it. I had more time than I have tonight to really get to it and also give people an opportunity to ask questions. And I was surprised. One of the ladies who was there talked about how she just came to some money, but because she doesn't have a lot of knowledge, she's afraid to even do anything. So right now, the money is sitting someplace doing nothing. And meanwhile, she's getting older. She's already close to 50. And we had the opportunity to tell her, do not procrastinate. Time waits for no one. You gotta exercise the option of sitting with a financial professional and get the support that you need. Now, in order for you to not be afraid, you have to have some knowledge. That's why on Let's Talk Money with Friends, we encourage you to tune in at 7 o'clock on Wednesdays and also to share with your friends because not only do you need it, but your friends, your family members, they need it. How many of you have been watching for 4 years? I know you've been watching because you're my friends and you tell me how you like the show. But yet you don't invite your friends to watch it. And meanwhile, these people are making financial mistakes. And they're not asking you, you're not charged, they're not, this is coming at no cost to you. This information you can share it by pressing the share button. You can press like. You can let your friends know via WhatsApp, via Facebook, via LinkedIn, via YouTube, via TikTok, you name it. You can share this information with your friends and let them know that Let's Talk Money with Friends is on every Wednesday. and we are here to help families. We do this because it's a passion. We know there are some hiccups, but we don't worry about those things because we know that we are living a purpose here. This is a purposeful. This is something that we're doing for a purpose, and we know we are changing lives. And tonight, if you heard me, I said to you clearly, you need to save. You need to have a savings account. You need to have retirement. Exercise that option. If your work offers you an opportunity to file for retirement, to complete a retirement paperwork so that you can start saving for retirement, don't say tomorrow. Tomorrow will never come. You need to exercise the option of owning a home because one of the ways to accumulate wealth and never pay taxes on some of the capital gains is by owning a home. The third thing is to have a life insurance because if you don't get to accumulate because you die prematurely or something happens to you prematurely, there are two types of insurance, the term and the permanent, and you can have living benefits, so many different things. That's why we're gonna have some friends coming on the show again to talk. Next year, we're gonna go over those same things because guess what? They never get old. Sometimes you have to hear them many, many times in order for them to make sense for you. We will be able to share more information about why you should have a life insurance policy. And lastly, if you want to buy yourself freedom and pursue your own dreams and have your own business and do what you need to do, because when you're good and ready to own your own business, to start a business, sometimes it's very hard to get a loan. I used to be in banking for 10 years, and I remember folks coming in looking for an SBA loan and they're getting denied. Why? Because A, they never had the experience of home ownership, business ownership. They're new to business. In order for somebody to invest in you, you have to show at least 2 years of history. And many of them just woke up one day, quit their jobs, and say, you know what? I'm gonna start a business and I need a loan. And guess what? They will get rejected because they did not have history. They didn't have 2 years of bank statements or 2 years of tax return to show to the bank that yes, I've done this and I'm good at it, and you can invest. So therefore, the way you can do it, self-finance. Get your retirement early, save enough early so that you can finance your own dreams because nobody's gonna believe in you as much you're gonna believe in yourself. So tonight, I thank you for your attention. Thank you for taking the time to listen. Thank you for taking the time to be with us. And thank you for sharing. Thank you for liking. And thank you for letting your friends know that Let's Talk Money with Friends is a show that they need to watch every Wednesday because guess what? You've been empowered. No excuses. You have been empowered and you shouldn't make any more excuses. I said that the same thing to the folks. If you want to contact me, follow me on all the social media pages that I have. Follow me. You've been empowered, and I'm giving this information to you free of charge. Share with your friends, share with your family, and let them know. Let's Talk Money with Friends is here for them. I want to thank you for your time. I'll be back next week. As I said, I was taking some time off, but this is a work that I do because I'm passionate about it. And I know that if I had not started doing this last week, I was invited to speak at the conference last week because of this show. So I'm gonna continue to trust that this show is gonna lead me to where I need to go. And I pray that you too will get the help that you need from this show. So I thank you. Have a good night.